Zimbabwe. Let's go back to Harare, where Peter is standing by with the Chief Executive Officer from Zimbabwe Chamber of Commerce, Takunda Mnangagwa. Peter.
Thanks very much indeed. Yeah, a little bit earlier on we were speaking to a geoscientist, and one of the things that we talked about, of course, was minerals and how to extract them and the human capital. Well, an interested party in the economy of Zimbabwe, of course, is the private sector and business in general. Joining me now is the Chief Executive of the Zimbabwe National Chamber of Commerce, Takunda Mnangagwa. Thanks very much for joining us. Welcome to the program.
It's a pleasure. Good evening.
All right, so the election should have happened. We should have had a president inaugurated tomorrow. It hasn't happened. International community were waiting for a result so that they can press the pause button off and start investing again. What about local business? Were they also waiting for an outcome? And how has this constitutional court bid affected that?
Thank you so much. Yes, indeed. If you look at the position today, I think we will say business is hoping for the best, but fearing the worst at the same time. Developments so far are creating a gap naturally. The level of uncertainty, the political risk, which every player in the market is somehow pricing in, is quite disastrous and destabilizing in not only the long run, but short to medium run. So generally, I think if you look at Zimbabwe for the past 20 years, the electoral risk, or can I say the debates and the arguments regarding elections, it costed this economy to the extent that if you look at the numbers, you look at the fiscal deficit to GDP today, double-digit 10%, you look at the current account deficit chronic, which had gone beyond 30 billion from 2009 when Zimbabwe started using multi-currency regime. All these factors, when you look at the agents of the need to solve these problems versus what we are seeing is haranguing, or can we say predicating by politicians, is quite very unfortunate. But as business, we are watching closely, but our belief is this is going to be settled not beyond August, given that Zimbabwe had lost a lot of ground, especially during Mugabe era, to the extent that if you look at the economic dynamics today, the level of poverty, the informality of Zimbabwean economy, and at the same time the real inflation rate, which is definitely beyond the official statistics level of 3%, is not acceptable.
And I guess one of the challenges that the next president has to deal with is that the Zimbabwean business, in theory, actually could sell all that it produces, but the difficulty is raw materials and inputs, getting currency to actually fund those purchases.
Yeah, but if you look at the major problems macroeconomic-wise, it's not necessarily even the foreign currency as per the strict sense of it. It's the confidence. It had went to all-time low levels to the extent that even sometimes the correspondent banks, which used to relate to the 18 banks operating in this country, you had seen them somehow shunning this market. You look at the sovereign risk, how much it is to gather or even to procure debt from any corner of the world. It's quite very difficult. So when you look at these problems, we also look at the issue of independence of institutions. We want that confidence to be inspired when there is these whole debates on the property rights, on the independence of judiciary, on all these issues. It certainly tends to eradicate or somehow erode the confidence levels which this country is supposed to be enjoying. So generally, if you ask, the major challenge at this hour is not necessarily the raw material issue as you are mentioning, but it's the confidence deficit which had somehow manifested in a number of challenges for this economy.
All right, so you're the chief executive of the ZNCC. You represent a number of businesses across the country. If you had to write a letter to the president and say, Mr. President, this is our top wish list, what are the things that he needs to do for you as business in Zimbabwe?
Naturally, if it is a top wish list, we will say Zimbabwe first. Because what we are having at the moment, where a polarized political environment is naturally somehow divulging into the economic, can I say, trajectory of this economy. You look at the issues to do with confidence, like I say. You look at the issues to do with independence of institutions. For any nation somehow to progress, West to in Africa and emerging economies, you will see how eroded institutions as they become captured and somehow created problems. And we are looking forward to a nation where the new president has to accept that political ambitions should not take precedence over the economic issues, over the poverty. If you look, having more than 500,000 people in the streets as informal sector traders, that alone should send a signal that we cannot afford to continue having this political haranguing. We cannot continue having all this debate. Remember, like I said, Since 2000, Zimbabwe had suffered a lot, especially with disputed elections. Today, the sanctions you hear when Zidera in America, Washington, was set to continue extending these sanctions. You go even to countries around. South Africa, as much as we might be close as a neighbor, but we saw even a bilateral trade agreement being terminated because the issues were they feel maybe Pretoria government that Zimbabwe could have done better in terms of such areas. So overall, it's not necessarily only Washington or Brussels where there's a standoff with Harare, but sometimes it's also created by Zimbabweans. Because if you continue doubting, lacking the credibility of election outcome, naturally, investors will look at it and say, to what extent will they respect my position? Now, it's unfortunate the issues even at the courts. If the courts are to rule against what most people would think, naturally, is the confidence issue, which will also come into play.
You've mentioned Washington, and for people who don't quite understand Zidera and these sanctions, just explain it to us briefly what it means and what effect it actually has on a typical Zimbabwean business and a consumer.
Well, in simpler terms, when you talk of Zidera for Zimbabwe Democracy and Economic Recovery Act, I think in 2001, under George Bush, then they enacted a law through both the Law House, House of Congress, and also the Senatorial United States of America to push for Zimbabwe to be slapped with restrictive measures. I think you had seen individuals being restricted to travel to USA. You had also seen the international financial institutions, which includes the IMF, the World Bank, to a certain extent, even the ADB Bank, which is domiciled in Africa, somehow taking a very standalone measure to deal with Harare. So in that, we can say the sanctions to do with financial institutions being restricted from supporting this economy. Look at the balance of payment challenges. A country running chronic capital account deficit. Now it's worsened by the current account where you had seen the ever-burgeoning imports somehow growing. And if you cannot to have what we consider to be budgetary support, just understand the risk it will have. So for business, it can't be as easy as people would want it to be, given that to procure credit today, the interest rates in this market, they are double-digit up to almost 25%. The reason why? Sovereign risk, like I mentioned, external debt beyond $12 billion, and we can't continue affording politicians possibly delaying everything through the fights we are seeing today.
Right, so what Zimbabwe desperately needs, political certainty, then policy certainty and confidence, not just by Zimbabweans in the Zimbabwean economy, but flowing from that, the international community might buy into the Zimbabwe story if the locals buy into the Zimbabwe story.
Absolutely. If you look, I always ask to say what could be the better measure, the barometer to confidence issues here. Look at the equities market today in Zimbabwe. Most investors, even if the appetite is shown, capital is trapped in the market. Whoever would want to declare or even to push dividends out of the country, you can't, for the simple reason that we are running a serious backlog in terms of foreign currency. We're also running a serious backlog, can I say, in terms of even the economic data output. What will I say by that? It can sound controversial, but figures coming out of even Zimstats at the moment, they are very difficult to rely on. I just spoke about inflation. If they are pushing it around 2.9%, but if you look at the ordinary business, today if a business is to look at the inflation rate same time last year, it had grown beyond 25%. So facts on the ground are pointing to an economy where the fundamentals are shifting, but what is somehow worsening it is the political uncertainty. Political uncertainty when it comes with a nation which does not have its own currency. Today, look at the Zimbabwe smart currency regime. We're having three currencies operating now, what we consider to be the local US dollar, the RTGS balances, which are rating or rather trading at a very heavily discount of almost 70% to date. You look at the bond note, you look at the cash rate itself of the US dollar. So all these factors, the reason why we are having the multi-currency, the multi-tier pricing regime, it's simply because of that deficit in confidence which had been inspired by, firstly, the political conflicts, secondly, the property rights arguments which you had seen with the indigenization policy for some years back, and thirdly, but not least, you can also look at how polarized this economy had become, to the extent that even most of the Zimbabweans, sometimes when they go out of the country, they feel comfortable to attack Harare than to represent it.
Final question, because it's the biggest issue for a lot of Zimbabweans, and it's getting money out of the bank, currency. What can the next finance minister do to fix that quickly?
It's very not difficult. What would I say if I say not very difficult? I mentioned the independence of institutions. The reason why we are having cash crisis today, we had always said the chronic fiscal deficit of almost 10% of GDP, it had created a gap where you realize that it had crowded out private sector spending or even borrowing. While its spending by government continues growing to almost 112% of GDP, you look at the savings ratio, it's in the negative, almost 4% of GDP. All those factors are what you need before you solve the current challenge. When there's macroeconomic divergence like what we're having, it can only be a pie in the sky to think of having your own currency. What you need is to solve those issues. Fiscal deficit we're having, the current account deficit. You look at the confidence issue. Confidence issue might be a soft issue, but how do you bring confidence back? Policy certainty, political maturity. Most business, like I said, they are certainly hoping for the best, but fearing the West because of this political tussle we are seeing today.
It's a lot of things to juggle and tussle with. Takunda Mnangagwa, thanks very much indeed for your time.
It's always a pleasure. Thank you.
Right, okay. So I was speaking to the chief executive of the Zimbabwe National Chamber of Commerce, and as you've heard, there's quite a lot to deal with. Whoever is president after the 14 days with the Constitutional Court, that in tray of tasks to do is enormous and needs urgent attention so that this economy can take off and fulfill the potential that it definitely has. We're going to leave it here for the time being, and you can catch me again tomorrow morning on Media Monitor, where we'll be in conversation with people from the media and also media monitoring in Zimbabwe, just to talk about the state of media in the country. All of that happening on Media Monitor tomorrow morning at 9. But in the meantime, it's good night from Harare.
Thanks so much, Peter. That was SABC senior news anchor Peter Ndoro speaking to Takunda Mnangagwa of Zimbabwe's Chamber of Commerce about Zimbabwe's economy. Please remember, we value all your comments, so send them to #TheFullView. I'll be back with more.